Now, earlier this week, Reserve Bank Governor Philip Lowe faced questioning in the Senate and House of Representatives over why the RBA had decided on 9 interest rate rises, with possibly more to come. This is what he had to say.
The rise in interest rates has been required to make sure that the current period of high inflation in Australia is only temporary. That's the job for the Reserve Bank of Australia as the country's central bank. High inflation is damaging and it's corrosive. It hurts people. It puts serious pressure on household budgets, and it erodes the value of people's savings. And it increases inequality, and it hurts most those on low incomes.
But even with the current cash rate at 3.35%, inflation is still affecting cost of living. It's still very high, and mortgage holders are feeling the pinch from rising interest rates.
To help us break down the economic reasoning behind the RBA's decisions is Suzanne Haddan, the Managing Director of BFG Financial Services. Suzanne, great to have you.
Good to have you.
Good morning.
Help us.
Help us. Well, Philip Lowe there speaking about inflation, saying it's damaging, corrosive, it hurts people, particularly on lower incomes. Let's start with the very basics, Suzanne, and tell us what inflation is and what's happening with it at the moment.
Okay, so inflation is merely the rises in price of goods and services. So going to the grocery store, getting your hair cut. And in Australia, we measure it by something called the Consumer Price Index, which is CPI. And it has a whole basket of thousands of goods and services. They're trying to work out what the average household spends. Now, at the moment, it's running at 7.8% for 12 months ending December. And so that's extraordinarily high, and that's the concern of the Reserve Bank.
OK, then explain to us the link between raising interest rates and then trying to stem the rise of inflation.
So to bring inflation down, you need to cool the economy, and that means you get people to spend less. So how the Reserve Bank does that is by lifting interest rates so those with mortgages pay more, less money in their pocket, and also when you're borrowing to buy big ticket items like a car, you probably can't. So less spending means that inflation will come down.
What does that do more broadly to the economy? Higher inflation, obviously we see higher prices, but what does longer term high inflation, what impact does that have on the health of the economy?
So built-in inflation will mean more pain as we go through the cycle, because those that have the least funds end up suffering the most. So what happens is when inflation is very high, there is a higher risk of the Reserve Bank coming in very strongly and raising interest rates too high. And that means the economy could go into recession, which is not good for anyone.
No. We'll get to the recession, the big R word, in just a minute. But, you know, we've already seen these 9 interest rate hikes already. Philip Lowe has signalled there's a possibility of more to come. Inflation is still high. So, I mean, what is the point? Why? Why is it still high?
So what happens is there's a certain amount of money still in the economy. People had built up savings buffers, about $300 billion that's sitting there. That means people can suffer this a bit longer before changing their spending habits. Also remember, with mortgages, fixed rate mortgages were extraordinarily popular because the interest rates were so low and people locked in rates. About $880,000 mortgages are coming off fixed rates this year, and that means a mortgage cliff, and they're going to have massive rises in their repayments, and so it takes a little while for the effects of these interest rate rises to go through the economy.
Yeah, so as you say, it takes a while for the interest rate rises to impact inflation. What are the other tools in the toolbox that could help to curb inflation?
So the Reserve Bank uses monetary policy, which we spoke about, increasing interest rates. The government handles what we call fiscal policy, and that means they can do things like increasing taxes. They can reduce their spending. Now, the problem is that monetary policy interest rates tends to be a bit more nimble in affecting interest rates, whereas fiscal policy, so the government making big changes, often goes to a federal budget, has to go through Parliament. It can be quite a lag. Now, Treasury have said at the moment fiscal policy is neutral. It's neither helping interest rates and inflation or hurting them. It's neutral. maybe they need to do more.
So there is a possibility that the next budget we might actually see some sort of tools being built in to try to bring down the inflation as well.
That would be our hope,
Right.
but if you imagine the political pressure on governments to make sure that they ease the burden of these higher interest rates, of the higher costs of living. And the trouble is, if they do too much, it can actually push inflation higher, and we get more pain when the Reserve Bank increase interest rates even higher.
I think one thing that people find so frustrating is that you're hearing one thing from Philip Lowe and from the RBA saying we need to keep hiking interest rates to make sure inflation is curbed, and then you have another expert saying no, we need to stop or slow down the hikes in interest rates. And when this is having real impacts on people's lives and their ability to meet repayments or put food on the table, how do you account for those differences in opinions?
So with economists, it is not unusual, nor is it unhealthy for them to have differing opinions, so long as we're all on the same page as to what you want to achieve, which is the welfare of Australia and the prosperity. But there are groups who represent other constituents. For example, a politician who has constituents with mortgages. They're suffering and they want to see interest rates not rise. Or think charities. They're trying to protect their clients from more pain and suffering because they are the ones that suffer the most.
Yeah, they certainly do.
Suzanne Haddan, it's great for you to come in and speak to us and unpack all of that.
Thank you. Yeah.
Thank you. Great to see you.